Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is investment analyst Christina Parthenidu. We'll be discussing the Reserve Bank of Australia's upcoming policy meeting on Tuesday and the outlook for the Australian dollar. So Christina, the RBA kept policy settings unchanged for the third time at its previous policy meeting, holding its benchmark interest rate and the yield on three-year bond yields steady at 0.25%. Do you think it could change course this week, since there's no doubt that the second quarter GDP growth readings will come in negative on Wednesday?
Hi, Maria. Well, indeed, we don't expect positive readings in the second quarter since most COVID-19 restrictions were in effect. From March to May, we saw capital expenditures and the construction index for the second quarter declining at a faster rate last week. So that was another evidence that a sharper decline in GDP is possible. Markets are currently pricing in a 6% quarterly contraction and an annual 5.3% downfall, which will be the first in many decades. And I think GDP data in the third quarter may not be pleasant either because of the restrictions the government are imposing the key states of Victoria and New South Wales to contain the second wave of infections. However, the encouraging thing about Australia is that despite the resurgence in new virus cases, the infection numbers haven't reached the levels in the US and Europe and seem to be trending down again. So Australia is still at a better place, and that may encourage policymakers to adopt a wait-and-see approach for the fourth time tomorrow, as the RBA chief said a few weeks ago at the House of Representatives. Besides, if we look at the options that have been in discussion for a more accommodative policy, I believe those are not in favor at the moment. For example, negative interest rates would push foreign funds out of the country, and this will be harmful for the economy because Australia's growth has been dependent on foreign investments for a quite long time now, and it's currently an attractive place to investors because rates in the US and Europe are lower. The other option is to intervene in foreign exchange markets and pressure the Aussie lower to hold trade international competitiveness. But according to policymakers, this would only happen if the currency was out of step with fundamentals, and it's not at the moment. The price of iron ore, which is Australia's major export product, has been rapidly increasing over the past 2 months. Moreover, data out of China, which is Australia's major trade partner, have been resilient given the current conditions, and the trade between the countries have strengthened despite their political conflicts. So given all this, I don't think that there is any urgency to change policy this week. Of course, a more cautious tone about the outlook of the economy could be warranted as the unemployment rate further increased and inflation turned negative. But besides that, I don't think that something could change.
Okay. Now, regarding inflation, the Fed announced last week that it will relax its price targeting. It said it will allow average inflation to surpass the 2% level for some time before it raises rates. That's another way to ensure that rates will remain super accommodative for some time. But what markets understood is that inflation could heat up at some point, pushing the dollar higher instead. Do you think the RBA could do something similar?
Well, the truth is that consumer price indices have been muted for many years now, and that made central banks to put their price targeting methods under examination before COVID-19. The RBA has been one of those banks, and talks have been whether the range target of 2 to 3% could widen to 1 to 3%, which might come back to the spotlight after last week's Fed's action. Overall, I believe adjustments in inflation goals could be a popular communication in the year ahead, and CPI readings could turn market movers in the coming months. I wouldn't rule out any comments on the topic from the RBA, but perhaps this could be more likely in the next meetings. Now about the Aussie, I believe that it could look for new highs this week if the RBA appears less dovish than expected, with GDP readings providing little volatility on Wednesday. Since markets are expecting further economic deterioration. Technically looking at Aussie dollar, it has closed above the 200 moving average in the weekly chart and is heading for the 0.74 to 0.7460 resistance area. If that is surpassed, I would expect more gains.
Christina, thanks so much. And thanks for joining us at xm.com.